Today we're going to be taking a look at some of the top setups that I'm currently watching in the markets. And before we jump into some charts, I just wanted to mention that the EdgeFinder 35% off sale is ending today. If you'd like to get some information about that current discount that we're offering, you can use the first link in the description down below, where a member of our team can help you with getting access to that discount, as well as any questions you might have about the software. We also do accept crypto if that is something easier for you. We also do payment plans, things like that. So if you have any questions about the tool, or you would like to go ahead and just get that discount information, you can click the first link in the description down below. Let's get started. So for those of you guys who are already EdgeFinder users, I just want to show you my settings here. I just went in here and I excluded the minor currency pairs from our categories list. And then I also excluded the neutral ratings here from our bias list. So that way the list of available symbols here shows me only readings on the EdgeFinder that are getting a strong enough score to give us a bullish or bearish reading. And that, by the way, is a -5 or less, or a +5 or greater. And all that means is that when looking at all of the economic data, technicals, and sentiment data that the EdgeFinder considers, we want to see scores that are high or very low, giving us a general bias one direction or the other. So with that said, let's take a look at some of these charts that are currently shaping up. Yesterday, I talked about the euro and the pound. I mentioned I was looking for some pullbacks, and they're actually kind of getting close to setups. Let me show you. So here was my chart markup from yesterday, where I was looking at the euro dollar at a possible first attempt on the long side at the 38.2% retracement. I am interested in potentially shorting the US dollar, and my first attempt here would probably be a long on the euro against the US dollar. Now, when I say first attempt, what I want to mention is that this would be my first of maybe 2 or 3 attempts on going long the euro. So if it doesn't work out here and I need to stop out of that idea, I may try a second time if we get down to the 61.8% retracement. So I have a couple entry ideas here on the euro. I actually like this entry more, but we may not see it, as I do think that conditions favor more upside for the euro. I like this pullback as a possible attempt to look for longs. So I'm looking at that. If I take that trade, I will share it inside of our Discord channel, but I'm watching it close with an anticipation to potentially get long here, even if that means I have to hold it over the weekend here. And on the euro, we're getting a +8 bullish score, which is pretty good. I'm also looking at the pound US dollar, which may also be shaping up. Let's take a look. So I've got the pound USD pulled up, and here you can see it's not quite ready for an entry based on what I was looking for. I'm looking for a retest of this support plus a 38.2% retracement or 50% retracement for a first attempt on this. So I do like the pound on the long side, but I've got to wait to see if we can get a little bit more of a pullback started before I jump in. While we're on the theme of US dollar pairs, let's take a look at the Australian dollar here, and we can pull that up, AUD USD, and see what's going on with this one. So the Australian dollar is sitting at a key level of resistance. On this one, I don't really have any clear entries unless we actually get a nice breakout through the highs. So if we get a break through the highs, I may actually be looking for long opportunities to continue this upward trend that we've started, but really need to prove it, right? So when I see a level of resistance come into play, a lot of people will say, well, maybe you should sell this, Nick. Maybe it's going to go back down. But again, I don't base all of my trading decisions based off of technical analysis. I know there are many traders out there that love their technicals, but for me, I prefer to use the fundamental side to make my actual decision-making process of whether I want to buy something or sell something. And then the last portion of my trading is the technicals, right? Where I'm just looking for textbook, simple technical analysis. I'm looking for breaks and retests. I'm looking for support and resistance levels, trend lines, moving averages. I'm using the textbook, simple technical analysis. And I've done that for years now with pretty good success. So I just want to mention that a lot of times you'll hear people who want to get all fancy, don't use retail trading strategies, this, that, and the other. Sometimes just keeping it simple is just so much better, especially when you incorporate, an understanding of what really is truly moving the markets, which is the fundamental side of things. Later in this video, I'll drop a clip from today's live stream where I discuss just how fundamental analysis is so important in our everyday lives, not just for traders, but for everybody on planet Earth. Stay tuned for that. Let's keep going with some more chart setups in the meantime, though. So the Australian dollar looking for potential break and retest. Kiwi dollar, we'll just pull that up here as well just for a moment. So we take a look at NZD USD. little bit of a pump here happening with a little bit of maybe some exhaustion coming in. I'm not looking to short this, but if you do get a pullback, I'm liking the 50% retracement level here, maybe the 38.2% retracement. But generally speaking, I'm bearish on the dollar and looking to short the dollar by going long counter currencies. So we'll see if we can find those setups. We're also getting a reading on US 10T. You might not know what that is. That's the US 10-year Treasury bonds. And if we take a look at one of my favorite symbols in that front, we could pull up TLT, which is a 20-year Treasury bond, but same kind of concept, basically bonds. And what we can see here is that TLT is bumped up against some resistance right around 99. I'd either like to see a breakout through this level, or I also really like the 94 level. And 94 was a key level of support or key level of resistance for the TLT chart here before we broke through that high and really went on that big push. That happened right around when people freaked out about, the Japanese, central bank potentially raising rates and causing the carry trade unwind concerns. People really jumped into bonds on that front. That being said, I either like bonds on the long side here or bonds on the long side if it comes down to this area. So I like both setups, but currently in no man's land, so nothing to do here, even though we're getting a bullish reading on the EdgeFinder. And I want to clarify this. Something being bullish or bearish in the EdgeFinder doesn't mean I go and buy it or sell it immediately. It just says, hey, conditions that you like here on the EdgeFinder, economic data, technical sentiment, they're generally pointing this direction. And then I will actually go look for trades myself using all of the simple, technicals that I use, as well as, my risk management plan and all the other good stuff that comes with good trading. Let's keep going. Take a look at the NASDAQ and the DAX really quick. So if we take a look at NAS 100 here, we saw a nice little bounce back here from the Nvidia sell-off. Nvidia earnings were good, but not quite good enough. And I want to just recap this for a second. People were very confused by why Nvidia went down on good earnings. And the reason for this is, let's take a look historically for just a second at what Nvidia earnings have looked like recently. We've got 19.4% net earnings growth. We've got 12.3% net earnings growth. We've got 9.3. And by the way, these are past quarters that I'm analyzing. So past quarters, we've seen, pretty strong growth for Nvidia. This one, we did see strong growth, but we're looking at 5% net income growth. Still good, but not nearly that 19, 12% growth that we've seen in previous quarters. So I think that's where markets, sold off, just being like, maybe the growth curve is steepening here or slowing here, right? And maybe that's why there's a little bit of concern on the Nvidia front. I'll tell you what, I'm a shareholder of Nvidia. You can see I've got 42 shares of Nvidia. And if this baby wants to come down further, I welcome it because I can build a bigger position. But if it doesn't, I'm fine with that too, because I actually think that the earnings were pretty dang solid. I think this company could do very well going forward, especially if we get a soft landing, if we see, the Fed begin to cut interest rates and the economy hold up. We could very well see a super cycle for Nvidia to continue, as chip demand is not going anywhere anytime soon, in my view. And according to, all the major corporations in the US who are these, the big customers of Nvidia. So I think, long story short, we take a look at that. We say the earnings season here has been pretty dang good. We've got Nvidia holding the line, still growing revenue, maybe not as fast, but still fast. And boom, we've got the NASDAQ, not at the all-time highs. I think we have room to keep going higher. I think that the trade is not done. And we also have confirmation from the EdgeFinder getting a +7. COT data looking positive for the NASDAQ. We've got retail positioning not great, but seasonally still okay. That changes in September, though. Beware of that. September, which today is the last day of August, this is going to flip negative. Actually, September is not a great time for the stock market. So let's put some caution on this really quick. I need to show you this because we're going into September. If you are somebody who trades indices, listen up. So on a historical basis for the last 10 years, September averages actual negative performance in the NASDAQ and the S&P 500. So as we go into this time, we do need to be cautious about stocks because historically speaking, we kind of expect a negative month in September. And so as we look into the future here, the next few weeks, is the NASDAQ going to fall off a cliff? Are we going to see some big selling in the NAS and the S&P, et cetera? Well, it's an election year, so there's a little bit of nuances there. The Fed's going to cut rates in September, so there's some nuances there. But seasonality is seasonality, and it's worth mentioning that, again, we historically see a negative month in September. It doesn't mean that every September is going to be negative. Please don't hear that, right? September could be positive. But historically speaking, this has been a negative month. So here's what I'm actually going to do about it. I'm not going to add a bunch of positions on the NASDAQ. I'm already currently long the S&P 500 and the semiconductors industry. SMH is the ETF that I'm long. So I already have plenty of long exposure. My approach to seeing this is I'm not going to assume we're just going to sell off just because it's September, but I'm going to keep my stop loss tight. I'm going to trail stops on the positions that I do have, and I'm going to see what happens in September and just kind of adapt accordingly. While we're on this topic, by the way, let me also just pull this up for gold, as I know we have a lot of gold traders in the house as well. September and October are historically not the best months of the year for gold. So if you're somebody who subscribes or pays attention to seasonality, please note, if you're somebody who watches gold, we are going into a period that is historically in the last 10 years, not a suboptimal time for gold price performance. But let me be very clear here. If we take a look at this dotted line, that's showing you the performance of this year, right? Seasonality is not perfect. Nothing is. In fact, if you looked at January and you said, oh, gold's going to be hot in January, well, it wasn't. And if you look at February, oh, it's going to be hot in February. No, it wasn't, right? It was pretty much flat in February and just slightly negative in January. So my point with that is that, seasonality does get it right oftentimes. That is why it is seasonality, but it's not perfect, and nothing is. So just keep this with a grain of salt, but I did want to go through seasonality as we approach September. Also, again, this tool is available inside of the EdgeFinder. If you don't have a copy, I mentioned at the top of this video, but our 35% off sale is ending today. So click that first link in the description if you'd like to go ahead and get access to our data and our tools. Taking a look at price action on the NASDAQ, I do think we have room to go, but with September seasonality right around the corner, maybe it's possible that we just kind of go sideways for a minute and await the Fed's meeting to really make a decisive move. It's possible that we just kind of go sideways. For me personally, I mentioned that I have a long position currently in SMH. This is an ETF that tracks semiconductors like Nvidia, AMD, Qualcomm, the semiconductor chip making companies. I've got a pretty good size position in this one, and I do think that it's probably appropriate to look at potentially trailing stops, especially going into that negative seasonality month. So we'll keep an eye on that. Going back to the top setups here, we'll take a look at gold here for just a moment. Gold I am still bullish on. I am still at where I was in yesterday's video. I'm looking for a breakout here. If we can get a break through the highs, then I will trail stops up to this point. Otherwise, there's nothing else for me to do. If I'm looking for entries, the only entry for me is this area of support, which I'm already long at. So if we break through the highs, then I'll trail stops. Otherwise, nothing for me to do here. Finally, we'll take a look at USD/JPY and USD/CHF. So if we just scroll down here to dollar yen on the daily chart here, I think that has limited upside. If we do pop up into this region, we are getting some bearish signals on the EdgeFinder. Possibly this area or that 152 level could be where I start looking at maybe some sells. And then USD/CHF, similar complex here. We've had this huge level of support. If we can break through those lows and do something like this, that could be a setup for me, or a move all the way up to 87.50 would be also interesting to watch. By the way, if you're looking for a better brokerage, I just want to mention this as we close out today's video. We've got several linked in the description down below, as well as something kind of fun. We just dropped a new Telegram channel for those of you guys who like trading stocks. We've got a stock Telegram now for A1 Trading. So if you'd like to join that, there will be a link down below in the description for that. It's brand new, so you're going to be one of the early days people, but I do like to buy and hold stocks that I like, and so does Frank, who's a member of my team and helps to develop all of our software, by the way. We're putting together a stock Telegram, so please join us in there if you have not already. If you're a stock person, you can hear about companies that I like, companies that Frank likes, and we'll just give you our commentary on what's happening in the stock market world as well. So tons of free value, brokers, Telegram links, all that good stuff in the description down below. Thanks guys for watching. Gap in the market that we see is that fundamentals matter, but traders don't use them. Why does everybody in the retail trading space only do technicals? I listened to a podcast last night where it was a panel of people discussing. It was a words of wisdom thing, and they were talking about how, I don't mess around with fundamentals, and everybody laughed and agreed, like, oh yeah, technical only trader. And I was like, that's fine if you are a purely technical trader and you've done your thing, then great. But for the 99% of people who are trying to use technical only trading strategies and losing money, they never even get a chance to learn fundamentals. They don't even hear, nobody talks about fundamental analysis except for, you know who does? And I make this point all the time. So if you've heard me say it, you know where I'm going with this. You know who does talk about fundamental analysis? Hedge fund managers. Great, fantastic money managers that have billions of dollars. They're not talking about a head and shoulders pattern or a moving average cross. They may use very simple levels of technicals involved, but I've listened to a lot of them. I listen to them all the time on, like, you can listen to CNBC and listen to people who manage a lot of money on there. And are they talking about technical analysis? Nope. Maybe a little bit, but they're not using technicals. They're using fundamentals. And so I want to just say that if retail is all using technicals, but then professional money managers are focusing heavily on the fundamentals, there's got to be something. There's got to be a reason they're putting themselves through the agony of learning fundamental analysis, right? Because fundamentals are not easy to learn. But why does retail only focus on technicals and these money managers are all about the economy, the Federal Reserve? Why are they all focused on that? Just got to ask some questions, right? We just got to think here for a second. It's almost like, if you want to get conspiracy for a moment, it's almost like they want you to just stare endlessly at charts. Don't look at this stuff. Don't look at that stuff. That's for people wearing suits and making billions of dollars. I just make that point regularly because, again, I think it's really important that we understand you don't always want to just try and do the same thing everyone else is doing. And it really is so important that you understand. I mean, if you are somebody out there and you're listening and you're like, I use technicals only and I make money, then I am not here. I'm not talking to you, because there are people who use technicals only and do just fine for themselves. I'm not here to say that you can't do that. I'm not the father of the markets. I don't get to tell everybody else what is right or what's wrong. Like, that's not my role. I'm just saying that for me and for many other traders who have embraced what we do here, it's been a breakthrough for a lot of people. They start understanding how the markets actually work. They don't, the other thing I like to say about fundamentals, why fundamentals matter, is because fundamentals apply to all of humanity and technicals apply to a very small, tiny minority of the whole globe, which is traders. Traders look at technicals. The whole world involves themselves in fundamentals. If you don't believe me, hear me out for a second. What do you mean, Nick? If everyone's involved in fundamentals, what are you talking about? Well, we all know how the gas pump prices feel. We know how the grocery store impacts us. We know how hard or easy it is currently to get a job. We know if our job is paying us, if the wages are going up, if they're not going up. We know who the president currently is, who it might be. The whole world, these are the real forces that move the markets. These are the things that only traders look at. So when people say fundamentals don't matter or don't move the markets, are you kidding me? That's what we all use in all of our lives, is fundamentals. Real demand for the latest PlayStation that just dropped, that is fundamental analysis. Real demand for the latest Xbox, right? That impacts Microsoft's earnings, right? Fundamentals is like a grid of reality and how it impacts the markets. And technicals, I'm not saying technicals are not useful. I'm not here to say, oh, if you're using technicals, they're plenty useful. I use them all the time. But I'm saying that we have to be humble enough to say this is only for traders. This is for absolutely everyone on planet Earth. What does Jim Cramer use? That's a good point. He does use fundamentals. But the other thing about fundamentals is that just like technicals, there's a wide arrangement of ways that you can apply strategies, so on and so forth. If you're looking for a better brokerage, then stick around for a second. I'm going to tell you how you can get some free sign-up perks with great brokerages all around the world. Whether you trade FX or indices, commodities, futures, all of the above, I'm going to show you a really cool way that you can get free sign-up perks with your new account. So if you're interested in switching into a different brokerage, you can get things like deposit bonuses or free stock shares, or you can even get access to some of our products for completely free. All you have to do to find out current perks being offered to new depositors is go to a1trading.com/brokers. That's a1trading.com/brokers. And as you look at that page, you'll see all these different offerings that we've currently locked down for you guys as subscribers, as viewers. Now, of course, we get something out of this. If you choose to use these links, you'll be supporting our page. But in return for the viewers, we've got great sign-up perks available for you guys so that you get some free game just by signing up for a brokerage if you're looking to do so. So check it out on our website. You can find current deals at a1trading.com/brokers. Thanks for watching this video, and on the screen right now you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.